CAPITA Financial Services Inc., a subsidiary of the Barbados Public Workers Cooperative Credit Union, has new leadership at the helm following concerns raised about its governance back in January. Desouza, a banker for over 40 years, is now the interim CEO. He says he's ready to take the company to a new level. In this episode of In the Know, he addresses the past issues, outlines his plans, and even talks about what Barbados' financial services can learn from the collapse of a US-based bank just last week. All this and more coming up on this episode of In the Know. Mr. Desouza, thank you for making the time.
Thank you for making the time to be with us.
3 months ago, CAPITA Financial Services Inc. was in the spotlight after failing to submit financial documents in a timely manner. Are there no systems in place to ensure that this doesn't reoccur?
Yes, there are. But first of all, to give some perspective on that, CAPITA is owned by the Barbados Public Workers Credit Union Limited. So it's part of that group. Financial institutions are required to rotate auditors from time to time. Regulators call for that because it is better to have a fresh set of eyes looking at your financial circumstances every so often. So the parent company made a group-wide decision to rotate auditors. New auditors came in. Now, when you have new auditors coming on to a financial institution, those auditors they have to be very, very, very careful because audit firms, they can face tremendous fines if they sign off on anything in a financial institution that is not accurate. So, as expected, the new auditors, they dug very deeply into CAPITA's circumstances because they had to, and that caused a delay in the production of the audited accounts. That delay resulted in the parent company, Public Workers Credit Union, being able to hold its AGM. The delay in holding the AGM is what caused the membership of the AGM to become very, very, very annoyed, and that led to them taking to traditional media, social media, the radio talk shows with their criticisms. Of course, the financial statements were eventually produced. They were signed off by the auditors. Those financial statements are available on the website, and they show that nothing is wrong with CAPITA. CAPITA is a stable financial organization. It is profitable. So it had nothing to do with the stability of CAPITA. Really, it's the change in auditors and the delay in the production of the financial statements that was the cause of the whole thing. Now, this year, you find that the auditors are now more familiar with CAPITA's position, so we expect the audit to go through much more easily. And what we are doing is we're putting in additional resources to make sure that the auditors have all of the information that they require to complete the audit in a timely fashion.
You came to the helm of the corporation just 1 month after this. Why you?
Well, the organization was at a juncture where it needed a CEO who was versed in the management of financial institutions to take it to its next level. I have been a banker for just about 40 years. I have particular specializations. I am specialized in risk management. I'm specialized on the lending side of a financial institution. That is what CAPITA is. CAPITA is a financial institution that makes us money in lending. So those being my specializations, credit risk management, I also had been in Barbados for just about 6 years as the managing director of one of the largest banks in the country. So with my experience, plus my experience in Barbados, knowledge of the market, the board thought that I would be the best person to take charge of the organization and move it to the next level.
So, despite this being a new role, you're not new to this.
Not at all. Not new to banking, not new to Barbados.
Can you outline your plans for the company under your leadership?
The things that that I have to look at and that I'm working on right now is updating the governance arrangements, looking at the governance structure, Very importantly, policy and procedure, reviewing the policies and procedures that the organization uses to do its business. What I also want to do some work on is on the product side. CAPITA specializes in mortgages, residential mortgages, and they also do a tremendous amount of vehicle financing. I want to be able to expand the product range a bit more so that to the extent that you have a broadened product range, it means that you will be able to onboard a lot more customers.
And speaking of expanding, there's been calls for financial institutions to be more understanding to small businesses. Are there any new initiatives or financial instruments being considered in that regard?
I'll answer that question in two ways. And again, I go back to my experience on the banking side, my experience in credit risk management in particular. The cry by small businesses, small and medium-sized enterprises, it's not a new one. Small and medium-sized enterprises tend to suffer for what they consider a lack of access to credit. And why does that happen? It happens for two reasons. One, invariably, small and medium-sized enterprises do not have a lot of equity. They tend to sail very close to the wind from an equity standpoint, and also they tend to have deficiencies in terms of their security, the amount of security that they have available. Now, it is no mystery that the failure rate for small and medium enterprises is high. And because that failure rate is high, banks have to protect themselves by looking for security. And there's a point that I always have to remind people of. A bank has two sides to its balance sheet. A bank has borrowers, but a bank also has depositors, and a bank has a responsibility to ensure that the depositor's money is lent properly. Okay, a bank doesn't lend its own money. A bank lends its depositor's money. So if you're dealing with small and medium enterprises, and history and time has shown you that it is a risky segment, the way a bank will protect itself and its depositors is by looking for security. So those small and medium enterprises that tend to not have access to security are the ones that would suffer for access to credit. However, the other part of your question, what do I intend to do? There are certain products that can be brought into play, working capital products in particular, because the small and medium enterprises do suffer for a lack of working capital financing. But there is a way that you can structure those products to mitigate the risk of not having security. So I will be focusing on the working capital side in bringing suitable products to the market to help small and medium-sized enterprises who need funding for the operating cycle of their business.
What do you see as the biggest challenge facing the company in this current business climate?
In the current business climate, Barbados, the economy, from what we are seeing and what we are reading and what we are hearing, the Barbados economy is doing, it has been doing very well. When you look at what is going on now, the tourism sector, it is running very well. The hotels are full, the restaurants are full. When that happens, it means that Barbados is doing well. And we are happy for that. What has to happen, of course, in those circumstances where your economy has picked up and it's starting to perform again, it comes back to your previous question. Small and medium-sized enterprises need funding to be able to take advantage of the growth in the economy. So the question is how you bring the products in to afford small and medium-sized enterprises the opportunity to provide goods and services to meet the increased demand that is being experienced.
Where do you see the financial services industry going?
The financial services industry is marching. The march has started and it is going to continue straight down the road of technology and technology-based services. Financial institutions are, in fact, becoming technology entities. In that regard, if there's one thing good about COVID, is that it forced people to use technology. Prior to COVID, we were having in the financial services sector, we were having a hard time getting people to stop using checks for their payments. With COVID, however, people were forced online to do their banking. They were forced online to make payments. Businesses also were forced to become innovative and to use technology to put their products and services into the market, and they were forced into using facilities that allowed people to pay for their products and services online. So that was an advantage. The one thing that has happened now is that people have gotten comfortable with online services, so they don't want to go back to the bank. As a matter of fact, people get annoyed if you give them a check, because if you give them a check, it means that they have to go to the bank, and they don't want to go to the bank, right? Pay me online. I'll give you my banking information, and pay me online. My mind goes to my two children. I have a 31-year-old son and a 32-year-old daughter, right? I don't think they've been in a banking hall more than 2 or 3 times in their entire lives, right? And they certainly don't want to have to go into a bank. They want to be able to do everything on their computer or on their phone. So that is where the industry is going. As I tell people, in today's world, it's not so much about the bricks and mortar of traditional banking branches. It's not about the bricks, it's now about the clicks.
When we return, we talk about what Barbados can learn from the collapse of a US-based bank. Stay with us. Mr. Desouza, we just saw international markets rocked by the collapse of a US-based bank. What lessons can Barbados and CAPITA in particular learn from that?
Well, the lesson to be learned there is really for any financial institution, and the need to manage risks, and you have to manage all of your risks, including your market risk. What happened with that entity is that they took in deposits from the tech sector and they invested the deposits in government securities. The tech sector, when they started to need access to their funding and they went to the bank, what had happened is the bank then had to start liquidating some of those securities. But by then, because the Fed had pushed up interest rates, the value of the securities had dropped. And that they had to sell off they had to encash those securities, and they ended up having their equity was almost wiped out, and that is why they collapsed. The point there being that a bank is an institution that you have to be very careful with, because all the parts are moving at all points in time. Interest rates are moving on both sides of your balance sheet. And once your interest rates start moving around, it affects your profitability. You have to look at your liquidity. On the other side, when you do your loans, you have to be very careful with the quality of the credit risk. It is not like somebody buying pens and putting them at a certain cost and putting them into inventory and selling them with a markup. The bank's stock in trade is cash. And the cost of that cash, which is the interest rate, it moves. So you have to be very vigilant in looking at the components of your balance sheet when you're running a bank.
Tell me about your portfolio as it relates to bad debts. What is your provisioning like? Is it still manageable? Has it increased over this last 2-year period?
What we saw, like almost every single financial institution worldwide, was an increase in provisions that was related to COVID-19. COVID-19 affected everyone, and because many more loans would have become delinquent, you need